example, what I thought, you could go through this very interesting proposition. Right now, I don't think it is tested in the Indian context. So if you look at the facts, what it says is that a PT, that's a Singapore company, assume for a moment, is incorporated in Singapore and in the business of operation of ship. It is 100% subsidiary in India to undertake following activities. Charter party evaluation. So before I take the vessel on charter or hire, the entire process will be done by the people in India. They will talk to various ship owners, etc. Providing market information to the parent company in Singapore, say, back office operation, accounting, HR, etc. And the subsidiaries say remunerated at 10% basis. Question is whether the activities performed by the subsidiary are in the nature of ancillary or incidental activity. Can I say, because what is all these operations you see, charter party, market information, are for what? For the purpose of carrying on the shipping business. So can I say that all these are related to that and hence exempt under Article 8? And take a different proposition. If I form the Singapore company, instead of having a company in India, forms a branch office to carry on the business. So it's an extension of that arm. Then can I say that, one, should there be a compensation or cost to cost reimbursement? First question. Second question is, assuming there is a compensation, can I still say that that 10% compensation is covered under Article 8 and not taxable? So this is something you will have to, and this could evolve over a period.
Yeah. One question. Yeah. If a shipping enterprise having place of effective management in Singapore has a branch in India, so the branch Article 8 will apply or Article 7 will apply?
Singapore is having a place of effective management.
Is a shipping company.
So
and the branch is in India, as rightly mentioned in this diagram. And then therefore, for a branch profit taxation in India, Article 7 will apply or Article 8 will apply? That's the question.
Yeah. So see, the question is, if you look at Article 8 and Article 7, Article 7 overrides Article 8 overrides Article 7. So if I am governed under Article 8, then you may not be governed under Article 7.1. Now his question is, if under the treaty between India and Singapore, assuming that the treaty says that not residence based, one resident of a contracting state carrying on shipping in the international trafficking, and he is effectively managed. So assuming that Singapore is effectively managed, by that logic, they are eligible for India-Singapore treaty. Now the question, his question was, assuming that India-Singapore treaty I apply, the second proposition is that Singapore entity has a branch in India, which is like this case only. In that case, whether Article 8 will apply or not, or Article 7 apply. So I would say Article 8 should apply, provided that is one. Now assuming that Article 8 is not there in the treaty, then what? Does Article 8 apply? Because he says there is a branch is the office in India. Then what?
Article 7 will apply.
No.
If there is no Article 8,
yes,
then Article 7 will apply.
Okay, and the other question, how will you attribute the profits?
It's a permanent establishment.
No, and what is, see, there the question is, what is the branch doing in India?
Okay.
Is it purely a back office like what I said in this? The example what I shared was, back office means was, I am saying it is doing business extended arm of the foreign entity. Foreign entity is engaged in the business of shipping or aircraft in international waters. So the ships come to India, ship may go to Thailand, Malaysia, etc. So, but these people in India who are there, they are to enable that, because all these activities are incidental or ancillary to the business. So the question arises, whether I can say that still you are not liable for taxation in India and TP may apply or may not apply, because look at applicability of transfer pricing. On a branch office, if I am having a branch, a foreign company has a branch in India, there are decisions which say it applies. But in the reverse situation, India having a branch outside India, they say TP doesn't apply. So these issues will be there. So I think somebody may definitely take a proposition that Article 7 applies. However, because you have a branch in India, but assuming that instead of a branch in India, you have an agent in India, then what? Then does it mean that an agent under 163, he can be assessed on your behalf?
Right.
Under 163, that question can arise. Yeah. Now, bear ship means, again, these are the terms which are generally used in the shipping industry. Bear boat means the one which is given on hire, that without crew. So taxability under the Income Tax Act and under the treaties. See, what are the things which could happen is, it could not be considered as operation of ship by lessor since crew was the lessee operating the ship. The example what I shared with you some time back, it could be considered as royalty for use of equipment and payment is for user hire. This is another act. Now go on to the treaty. under the treaty can be taxed as royalty under Article 12, 13. Whether covered under Article 8, is it incidental to the operation? Is it rental income? Because as we saw the treaty of Israel, rental is covered. Even rental of containers get covered. And whether it is covered under the Article 7. So these are the questions perhaps you have to address, because it can't be a situation that when you file the return, you take only one argument. Because the moment you take one argument, the other, and you are exposing to the other argument. So you have to negate that. Like under transfer pricing, I apply all the 5 methods and discard the method and then say, okay, only one method I am applying. Same principles you should apply here. Now, slot charter allowed, I have time?
Yeah.
Charter allowed to place certain number of container slot as per disposal in the vessel. So again, there are two different scenarios contemplated by the Bombay High Court. Slot hire facility availed for carriage of goods from India to a final destination. And secondly, slot hire facility obtained on feeder vessels for delivery to international hub from where it is delivered. So this is more of a second category, is transshipment. So assume the cargo goes from India to South Africa via Singapore. India to South Africa direct is the first case. Second case is India to Singapore, and Singapore to there is transshipment. So the ruling says Article 8 benefit granted by relying on moral commentary, since it is ancillary to the operation of ships. And Article 8 benefit again granted. Bombay High Court stated that the slot hire equipment are inextricably linked to the operation of ship by the taxpayer. But here, though the decision is quite favorable, but let me tell you, it can vary, because depending upon your facts, the arguments could be different and the answers could be different. Because in this case, perhaps the slot arrangement was less, 80% or 85% of my own vessels I own, chartered, and balance was slot. And feeder vessel. Now here the controversy is a short sea vessel which transfers cargo between central hub ports. Like in the earlier example what I shared, slot hire, India, Singapore, South Africa. So what happens? My obligation to the shipper or the company when I export the cargo is India to South Africa. But my vessel, because Indian ports are not big enough, or large vessels can't come to India. So generally what happens is that there is a transshipment hub, which in this case is either Colombo or say Singapore. So now go to the next page. Next page, if you see, sorry, feeder vessel would mean I hire a vessel which will take cargo from India to Singapore. So the question is whether such an activity of carrying the cargo from India to Singapore can be said to be the operation of ship in international traffic eligible for the treaty. So that particular leg, that entity which is doing that function of carrying from India to Singapore, whether they will be eligible under the Article 8 or not. So the ruling says feeder vessel is owned by the SSC or by the members of consortium. It is ancillary to the main activity. SSC is to establish the link between the transportation of cargo by feeder vessel with the transportation mother vessel. And these are the decisions where India to say South Africa, the cargo had gone, and I had engaged in between another company for moving the cargo to India to Singapore. So the decisions say that as long as I can prove and justify that the obligation I had to take the cargo from India to South Africa, and I have to link invoice wise or the PL wise I have to link, and once I can link that, then I am eligible for the treaty benefit. So this is just an example of international traffic defined in the article. Now here the question is, because as I told you, in the article it talks about international traffic. So what is international traffic in this case? So if you go case 1, Singapore, Chennai, Surat, UAE, Singapore, Chennai, Surat, Chennai, Surat. What will qualify as international traffic? Will second qualify? Will second qualify or not? Because it is Singapore, Chennai, Surat. So, because see the question is, that's why if you look at 44B and 172, export freight and import freight. If it is coming to drop the cargo and take the cargo, so the movement is there. And by and large, for any shipping, foreign non-resident shipping company or non-resident aircraft to carry on domestic, they require permission. And under the permission, they have to change the flag also. It should be Indian flag. These are under the merchant shipping laws. There is a requirement. Unless you do that, you cannot operate within, and they call it a cabotage. and there is a lot of objection from the Indian shipping companies that foreign shipping lines should not be allowed to operate in the Indian water. That's why if you look at the treaty, on the I'm talking about Article 8. Article 8, if you really look at India perspective, all talk about shipping lines and airlines, whereas OECD talks about inland waterways also. So effectively, if you go to Europe, virtually there is a waterway from one country to another country, that also is eligible under the treaty. So this is something like a pool arrangement. Article 8 applies to profits from participation in, if you read when I spoke about Article 8, the words were pool, joint business or international business. So the question is, what is the meaning of pool, joint business or international? So typically a pooling arrangement involves pooling of resources by various shipping or airline companies, provision of services to each other, and dividing resultant profits amongst each other. So in the case of the airlines, Delhi Tribunal, in the case of Lufthansa, German Airlines, pool concept should flow from the international airline technical pool, which would require reciprocity of rendering of services or facilities. It means it can't be like a, suppose, take a simple example, what is pooling, I'll explain to you. I am say, Hapag-Lloyd, another is Maersk. I am taking my cargo, there is a pooling agreement between both the shipping companies. And generally in the container business, what happens is that there are scheduled arrivals of the ship. On first week, third week, sixth week, the Hapag-Lloyd vessel will come. The other airline, other shipping company may have somewhere on second, fourth. So in this situation, what they do is that suppose the cargo doesn't come in time. So this company A will tell the company B under the arrangement, you move my cargo. The shipper doesn't know at all. Because bill of lading is issued by the shipping company. This is the internal arrangement. This is what is covered under pooling because both are in the international traffic. So there is a reciprocal arrangement so that the ship doesn't go empty or ship is not overloaded either way. This is what is that. So here they say reciprocity of arrangement in receiving services, use of standard agreement forms, and non-existence of commercial activities in providing. So there is a like a barter trade. I will not charge you when I take this much of cargo. You will not charge me. So that is the understanding which is there. Here reciprocal arrangements entitled to benefit of Article 8.4. And if I am only rendering services and not availing services, then I can't be eligible for a treaty benefit because I am not participating under the pool. So in one way, suppose I carry the cargo of company A carries for company B throughout the year, but there is no reciprocal arrangement. Then the freight what I collect will not be eligible for the Article 8 benefit. Other aspects are income from alienation of ships or aircraft. Generally, taxable under Article 3 on capital gains. Examples are Canada, Denmark, France, or Singapore. Then, if you cover, can it be covered under Article 8? Yes, some treaties do talk about like rental I spoke to. If I sell the ship also, they can be covered under the treaty. Suppose the ship comes to India and I sell the ship in India. Then what happens? Can I say if the ship is sold in India, hence the gains etc. what I can get is eligible for Article 8, Article 8 or 30. Consideration of fee by foreign shipping line in India. Now here it was this is not directly in the lines of shipping, but here what had happened is that oil rig, which was this company had operations at 3 different customers in India. The presence of the ships in India was more than 91 days. So technically that under the agency fee or not agency service fee or supervisory fee or installation fee, that threshold was 180 days. But here the tribunal held that 91 days you are present and that wherever you are present, you are eligible for using the facility of the SSC of the premises of the client, and hence they said you have a fee in India. And other aspects are Article 8 excludes shipping income, as I told you about Switzerland, which was not there, only aircraft was covered. Article 7 excludes shipping. Now it goes to Article 22. This is something quite interesting. If Article 7, what is Article 7 fails, can I go and say that under Article 22, other income will be taxed? Because the right to tax under that article is of the resident country, not India. So in this case, of course, this was not decided in the favor of the SEC, but this was a very interesting case. where they said that I will not be taxed under Article 8 is not there, so hence give me the permission to go under Article 22, and under Article 22 as other income will be taxed only by Switzerland, not by India. So now this is the last part. What I touch up is that for the purpose of getting the benefit of the Article 8, foreign companies have to generally, before the start of the year, say before March, they have to obtain a DIT certificate from the tax officer where you are filing the tax returns. And the documentary evidence required for the purpose of obtaining the certificate is the DRC, Certificate of Place and Effective Management in that jurisdiction, Form 10F, Charter Party Agreement, Ship Registry, or any other document which the AOMA asks for. The documentation becomes critical because inconsistency in document is required at different ports, because each port I have seen the requirement for documentation and the tax department's requirements are quite different. In fact, I'll tell you, I had to attend one case of a prosecution. A master ship, master, as I told you in 172, what happens when the vessel comes? The master of the vessel is filling in the form and giving the authorization to and he signs the form. That form was totally blank. The practice in the industry is that that form is filled up by the CHA. And inadvertently that form got filled with the return. The tax department says this is bogus. Because this is bogus, he said, malafide intention, etc., and I penalize all other consequences. Fortunately, after representing with him, at least because the prosecution directly goes to the CEO of the company or the MD of the company, he dropped the proceeding because there are a couple of other arguments he took to say that there is a clerical error. So how do you distinguish between a clerical error? And he said that no, he is just filling in, means you have all forms with you, these are created by you, and vessel has come on, I don't know. So these are the thought process, sometimes it goes. And complete breakdown of income as at the time of assessment by the tax authority. I think I have covered most of the aspects. Yeah. If you have any other questions, I will be happy to take it. Thank you.
Yes, please.
Good morning, sir.
Yeah, please.
So sometimes in our practical experience, we also observe that the flag of the ship is in some tax having country like a Liberia or a Marshland, where India does not have a treaty. And the operator of the ship is not coming from any other country. So sometimes the tax department is also gone into the depths of really distinguishing the flag, and the actual flag is registered in one country, but the operator is in another country, and trying to deny. So in your view, how do we tackle such a situation? Because ideally the flag obviously will be registered whether in a different country, and the operator, because then the operator has the licenses and the skills to basically operate that ship. So how do we tackle such?
So what is the issue you faced?
So what had happened was we were also trying to obtain the Article 8 benefit, but the charter party agreement states the operator was from Norway, but the flag of the ship was in Liberia. So the department really raised a lot of questions that why the flag is registered. Why is there a difference? Basically, if the operator is, then why didn't you change the flag? They went into all those and they denied the benefit. So
I don't think you could deny the benefit as long as your charter party agreement.
yes,
Was it a time charter or was it a white charter?
time charter.
So it should not be a problem. White charter shouldn't be a problem because as long as in the charter party agreement you are in a clear-cut position to demonstrate that. See, if you look at Article 8, what it says, non-resident engage in international traffic which is owned or chartered.
Right.
So Liberia, if they own and they carry on business of shipping, they are legal. But because they may not have the manpower or the technical competence to do the shipping business, they give a lease to the operator. In this case, maybe a Norwegian company. So Norwegian company, as long as has a valid ship registry, charter party agreement, and also has received the freight. See, many a times what happens, if they may have a charter party, but does the charter party also contain terms whereby they have the right to receive, not somebody else? If suppose in this case some third person is receiving the money, then the question arises, who is the beneficiary? And that is a challenge, and charter party agreement terms sometimes are inconsistent, because what is happening is that charter party agreements are printed very fast.
Right.
Because I have come across cases where if you tell a client, okay, this charter party is not correct or their terms are not proper, immediately in half an hour you get a different charter party agreement.
That's true.
So the question arises, how is it possible to get so fast these agreements? So that raises doubts as to whether the charter party agreement is merely a formality or a document which is prepared, cut paste you do, and then you send it without looking at the content.
So
And that very often happens in the industry. I think.
we need to vet the document well in advance.
No, and the time charter, many a time you may file a charter party agreement and saying that this is the agreement under which I should be eligible. But the period when the vessel came into India and the charter party period would have already expired, then also you will not get the benefit.
And one more short question.
Yeah.
So on that coastal movement, like you showed us the demonstration of Surat, Chennai. So sometimes what happens, obviously the tonnage of the ship is obviously higher, and in one particular port, there will be offloading of some tons, and then there will be a requirement or a demand in another port in India. Say in Chennai will be 100, and then balance 200. And so does not tantamount to coastal movement?
No,
Right?
no.
This is just a
You are picking up the cargo at different.
Yeah.
That should not be. Okay.
This will be the last question, and then we'll go to the next session. So, Sudhir also has to go for a call at 11.
So for section 44B, when it's mentioned engage in the operation of ship, so for that also you require ownership or chartering. Like if it is an MUOCC, can it still go for the benefit of 44B?
In UCC, there could be challenges, because what happens is that by and large in UCC, whatever I have seen in the practice is they may own one vessel and rest they may have the containers and they may carry on the business. But without a vessel and directly carrying on this business could be a challenge. It could be a challenge, because getting a DIT certificate is a prerequisite before you even carry on. So, but whatever I have seen is that NUCCs are there, but they own a couple of vessels at least, and now that percentage of vessels they own vis-a-vis or the percentage of income from own vessels in the other vessel, that question could be there, but that is a prerequisite at least to get a DIT certificate. And without a DIT certificate it is difficult. Okay, thank you.
Then the